So what comes to your mind if I mention the words stock investor? You're probably thinking of a guy wearing a suit, going to work at a big firm making millions of pounds. And while that might have been true a few decades ago, things are different. We're in 2020 now, and anybody with an internet connection, a smartphone, and a bank account can start trading apps. Now, I probably sound like I'm trying to sell you something, but I don't make any money off doing this, aside from maybe if you decide to use my referral link to sign up to Trading 212. But aside from that, I'm just making this video to educate you guys, and it's very different from my usual doctor videos that I'm posting on this channel. So I hope you find this educational. Do let me know in the comments down below. Before we get started, I think it's important I share a few lessons with you guys. First of all, stocks should not replace your savings account. What you want to do is have enough savings so that in case of any emergency where you need to use your money, that you'll have enough money not to need to dip into your stocks. This is because the stock market's volatile and fluctuates quite a lot. So if you're stuck in a position where you need money for an emergency, you might be forced to sell your stocks at a point where the markets are down, which will cause you a loss. So make sure you've got a few months of emergency savings ready before you invest any meaningful amounts into the stock market. If you don't have this, it's also okay. You can just invest a little bit less than you would have otherwise. So now you can invest with as little as £1 with some of the apps that are available, but I'm going to get to that soon. The second thing to note is that stock market investing is probably not going to make you rich. Unlike what people on Instagram are promising, you probably will make a few percent on your money, but unless you're really lucky and you manage to pick the next Amazon or Tesla in its baby stages, you're probably not going to become a millionaire unless you already have £1 million. But over the long term, this is a different story. When you look at the growth of the stock market every year, if you invest regularly from a young age, over the decades you can build up more than £1 million with not that much money, to be honest. But we're going to get into that as well soon. The third important point I wanted to say is make sure you do your own research. Just because your uncle's boyfriend's goldfish said that this one stock is going to go up does not mean it's going to necessarily go up. And anyone who tries to predict the stock market is going to be proven wrong probably. It's impossible to do that. And I do urge you to do your own research. Some people look at stocks as being gambling, but this is a bit of a mistake because it's not gambling if you do your research and you research companies' financial statements and things like that, which can be quite complicated, and that's why it does take a little while to learn the stock market. But to analyze the stock market properly, I would recommend one book. Out of all the books that probably exist, this is the best one. It's called The Intelligent Investor by Benjamin Graham. And if you don't know who Benjamin Graham is, he's the mentor to Warren Buffett, who has made more money on the stock market than any other person alive. So it's quite a good book. Second of all, there's a few good YouTube channels I can recommend. So the ones I watch are Nate O'Brien and Graham Stephan. These people aren't trying to sell you anything, and they're not in your face about their advice. They're very realistic, so I do like them for their honesty. And third of all, there's websites as well, such as Investopedia, which will help explain all the terms. A share is basically a part ownership of a company. So when you buy a share, you own a tiny percentage of that company. And as the company does well or bad, your percentage of that company will either increase in value or decrease in value. Although this price isn't set in stone necessarily, and companies can have good earnings and still go down in price, and have bad earnings but still go up in price. And the reason for this is because the price of a stock is dependent on supply and demand, and depends on how much people are willing to buy that stock for. In fact, when you see the stock price on your app or on your brokerage, what you're seeing really is the price that stock sold for last. So it's all down to perception, and this is why financial traders will often watch the news and scroll through and just be looking at any news about the companies they're investing in, because that can make the stock go up or go down really quickly. Stocks are sold on stock exchanges, such as the New York Stock Exchange, London Stock Exchange, Shanghai Exchange, and this just depends on which country they're from. And you can only buy and sell stocks during the opening hours of these stock exchanges, which will differ depending on the part of the world they're in, of course. So the American stock market, for example, opens at 2:30, whereas the London Stock Exchange opens about 9:30. So yeah, make sure you know that. You can check sort of how good a company is doing is through their earning reports. Every 3 months, companies tend to publish their earnings reports, and in that you can see how much money they made, how much of that was profit, and whether they made any losses. And this helps inform your decision quite a lot, because if a company's not making money, they're probably not the best investment unless they have some really, really big change they're about to make. Let's get on to the important bit. How do you buy stocks? Now, there's two apps that I know. One is called Freetrade and one is called Trading 212. I use both of them and I've got accounts with each one, and they're both pretty good, but at the moment I feel like Trading 212 is a little bit better than Freetrade, purely because of the tools it offers you and the fact you can buy fractional shares. So let's say you can't afford the $2,300 share for Amazon. What you can do is buy 0.11 share, so you're buying it for 10% and you own 10%, which is useful if you want to buy big stocks but don't want to invest that much money straight away. With all that said, you're probably wondering now which stock you should buy. And to be honest, I don't want to give you any suggestions because I'm not a financial advisor. However, if you want to take the most difficult part out of stock investing and don't want to pick individual stocks, what you can do is buy index funds. Now, an index fund is basically a collection of different stocks, and it allows you to spread out the risk. And different index funds exist for different businesses and industries. You can buy an entire country's index fund. So what that will do is give you a share with fractions of the biggest companies in that country. So for example, FTSE 100 is the 100 biggest companies in the UK by their sort of share in the market. And when you buy one share of the FTSE 100, you are buying all of those companies, but very small fractions of each one. So you get the average as a return. Now, the only one that I know better than FTSE 100 is the S&P 500. This is the 500 biggest companies in the US. And as a rule, it tends to grow 9% per year ever since it was created many, many decades ago. So I do recommend buying the S&P 500. And in fact, studies have shown that the S&P 500 on average actually outperforms active investors. So if you invest £1 today, in 40 years from now, that £1 could be worth as much as 30 times that. And so you can see how quickly that wealth can build up as long as you're patient and don't sell your shares. I'm going to run you through a video clip now of me buying a share on Trading 212 and me buying a share on Freetrade as well, just so you can see how easy it is. You can see me here opening up my Trading 212 app to buy a share of the S&P 500. This is completely commission free on Trading 212 and so easy. Just look at it. And voila, there we go. I now own a share of the S&P 500. Here you can see me repeating the same process on Freetrade. It's just as easy as Trading 212. Thank you. I hope you found the video useful. If you did, please give it a like and subscribe and comment down below what you'd want me to cover next. I've got a free Trading 212 share to be offered to you if you sign up using my link. I'll put it down in the description box below. If you sign up with that, we both get one free share each, and it's up to £100. So far I've been pretty lucky. I've received shares worth £70, £80, £50. So it's not like you'll be receiving just measly shares usually. I don't know if I've just been lucky, but it's worth giving it a go. Thanks.